Well, I think fintech encompasses a lot of different things, right? And when we think about investing in fintech, we also think about a lot of broad subjects. And these are all market sizes that start with a T, trillions, right? These are very traditional spaces that, because they've been heavily regulated, have largely been untouched. This encompasses everything from the daily coffee that you buy at Starbucks to hundreds of millions of dollars that are transferred between businesses every day.
The millennials, as a group, 60% of them actually would choose a technology solution over a financial institution any day of the week. 80% of them view their banks as transaction mediums versus an interaction medium. So if you take both of those together, you actually have a totally different paradigm in how they want to interact. And so they are a very powerful block in how these products and services are getting developed.
What you're seeing is companies are able to provide very targeted advice, very transparent advice in pricing and value, which consumers love.
Metro-Miles per mile car insurance, instead of one flat rate you get for 6 months, you pay by the mile. We send you a device that plugs into the car's diagnostic port, and at the end of the month, you pay for the number of miles you drove times that per mile rate. So our customers end up saving about 40% on average on their car insurance.
And so Metro-Miles tied in this new data source to allow consumers to actually pay for the risk that they're generating versus paying for the risk of the entire pool. And that's very, very disruptive. And that's something that can only be built from scratch and only be built from a very strong technology base.
Main advantage is how we leverage data science towards the data we're capturing from the device. And not only the pricing of the car insurance product, but also all of the services and processes that are involved in delivering it. So in addition to saving money with per mile car insurance, our customers get access to all of that data coming from our device. And they get this in the form of an app or a dashboard that gives them a view of all of the trips they've taken, but also they get alerts if they're parked in a no parking zone, so they can move their car in time so they don't get a parking ticket. They can diagnose car issues when the check engine light comes on. They know how much they pay in gas, et cetera. And all of these features actually have proven to be a significant retention driver for the business.
It's a massive market, over $100 billion just in premiums generated, and you have 15 to 20% of consumers switch providers annually. So there's a massive switching market that the company can go after. And there's a lot of consumers that actually drive less than 10,000 miles a year.
Our early thesis at Metro-Mile was our core group of customers would be urban millennials. In fact, our services appeal to a much broader group of customers, and we can access them by just evolving the product message and the opportunity of delivering service. Customers are looking for more than just saving money on their financial services. They're looking for additional value that helps them either avoid other costs or helps manage the risk of owning the vehicle in this case.
So you're starting to see this proliferation of consumers that want to understand their financial situations. They want to have these personalized solutions around their data, around how much they're spending, around budgeting.
The merchants play a very important role here as well. So if you think about merchants, before it was just credit card transactions, right? And now, because of all these payment modalities and different payment rails, they are seeing their businesses evolve as well, and they are embracing technology.
So Raise is a marketplace for buying and selling gift cards. We connect individuals looking to use discount gift cards for everyday purchases and others looking to sell their cards for cash. We're solving a really big problem in the market today that exists because there are hundreds of billions of dollars of gift cards that are distributed every year, and there are now tens of billions of dollars of currencies that are out there that go unspent each and every year. We see ourselves much more than just a marketplace for gift cards. We're partnering now with hundreds of retailers, and we really see ourselves as building kind of the future of retail and mobile payments, kind of bridging the gap between loyalty and customer acquisition and retention. I think you're really seeing a lot of change in the way that brands are connecting with the general audience, where, kind of gone are the days where, brands or retailers alike were spending billions of dollars on TV ads and spots or billboards, painted across the city. Today, brands are depending on new technologies and new marketing initiatives across these platforms like Facebook, like Instagram, like Snapchat or others, similarly to reach kind of core audiences and specific demographics of the core users that they're looking for. And so Raise is leveraging a lot of these networks such as Facebook and Instagram and Snapchat to connect, help connect the brands directly with the core consumers of our product. So helping them better understand who their customers are, how often they visit their stores, how much they spend at their stores, ways that we can create better value and really personalize offers for those individuals. Raise is really focused on building the future of retail payments. And what I mean by that is mere fact is that we're not only going after the hundreds of billions of dollars of gift cards that are activated each and every year. We're really going after the $23 trillion of consumer retail spend that happens each and every year globally. Gift cards is a great segment into that space because it really defines the opportunity in the prepaid world, and the fact that prepaid is the most secure, it's the safest, it's the fastest way to distribute currency, and it's a market that we're really excited about.
One interesting way to really think about what's going on with fintech and the disruption that's happening there is to look at a large bank and to go through all the various business units and business lines that a bank has, and to really think about all the disruption that's happening. And it's actually pervasive. The disruption that's happening is up and down all the businesses of the bank, whether it's lending, whether it's credit cards, whether it's bill payment, whether it's loan processing.
I think there's a big shift in consumer perception within the fintech and financial services industry. And I think that's driven by a number of different things that have happened over the past decade or so. I think first of all, you had this very big recession globally. And you think about it here in the US, that's actually driven a fairly large distrust of the traditional financial institutions that have been around for decades, that have built up their brands. But consumers actually look at those and understand that there's a little bit of misalignment in business models and value to the consumer.
Robinhood's mission is to democratize the American financial system. That means that we want to take the financial system and make it useful for all Americans, not just the people that have a lot of money. What we do right now is we make a stock brokerage app that lets you buy and sell stocks, publicly traded companies, ETFs, from your phone, and it's free, it's very well designed, and it's really easy to use. When we were starting Robinhood, we noticed that just a lot of our friends, people in our generation, weren't participating in the stock market. In the 3 years that followed 2008, 91% of the recovery from the recession went to the top 1%. So what that means is that there's so many Americans in this country that have just been left out of the financial system, and they are pretty frustrated with it. We've been able to make investing in the stock market dramatically easier, dramatically cheaper, and just dramatically nicer for consumers. And the stock market historically has been the best place to keep savings money. It's returned close to 10% year over year over the last 100 years. We launched a paid version of Robinhood. It lets consumers borrow money from us. So if you have $2,000 in your Robinhood account and you want to borrow an additional $2,000 to invest in stocks, you can do that through Robinhood, and it just costs $10 a month. We have users from all 50 states. We have tons and tons of consumers in the Midwest, college towns all around the US. The American experience and the ability to have upward economic mobility is what makes our country so special. And so actually being a part of this system is a great way to take part in that.
I think Robinhood has done a phenomenal job of building a brand that aligns with consumers, and you've seen that in terms of the velocity of growth of consumers in that target demographic just flocking to the service. They've made it mobile first. And so if you actually ask a bunch of millennials, would they rather visit the dentist or a bank branch, 71% would actually rather visit a dentist, which kind of shows you where we are from a consumer perspective when it comes to interacting with financial services. So Robinhood is a great example of that.
You've heard us talk about the API economy and what developer-based business models are doing across our tech practice, particularly in the infrastructure software layer. That is also moving towards a lot of these vertical markets, financial technology and financial services being one of them. What's also happened is now there's so many of these applications and products and services that now this infrastructure layer has emerged. And for us, infrastructure bets are also something we get excited about. So Plaid is a great example of that.
Plaid, we enable anybody from developers to large companies to innovate and build incredible financial services.
So we sit between the banks on our back end and the consumer applications on our front end and business applications on our front end, and build the infrastructure that lets you connect a bank account into an application and then get bank-like functionality out of that application.
We actually ended up starting Plaid for ourselves. We were building what we thought at the time was a really cool application, and we realized that actually the technology was not there to actually build what we wanted to do.
And ultimately, we found that it was more valuable for us to focus on that platform layer and license that platform layer out to all the other fintech applications, all the other companies that wanted to create change in financial services. And that would end up having a much larger impact than us building our own consumer applications. So Plaid powers everyone in financial services. We power the small startups. We allow them to build brand new businesses or kind of existing startups to grow and scale their businesses in new ways. We also work with a lot of the Fortune 500 and even Fortune 50 companies as they're thinking about how do we revamp the way that we interface with our consumers when it comes to financial services. And then many of the largest banks in the US are both our partners, our investors, and also our customers. The ACH system is one of the largest payment systems in the US. It's significantly larger than the card networks, but it's something that hasn't had a lot of innovation and a lot of modernization in the past few years. We're very excited to have recently announced a partnership with Stripe, another one with Dwolla, and there's a number of other ones in the pipes to actually help build tokenization into the ACH system and allow consumers to make direct transfers, direct payments from their bank account in a tokenized manner.
So Plaid actually taps into a bunch of different practices within NEA. Because they are an infrastructure level company, they tap into themes around enterprise SaaS. They target developers, so they take a very developer-friendly approach with their API. At the same time, they actually have to have a very beautiful and seamless consumer experience as well. So they kind of have that beautiful triad that fits in very well with NEA's core competencies across different practice areas.
You can actually say that we've been investing in fintech for 20 years. So when Dick Kramlich invested in Financial Engines in 1997, he didn't think about investing in a fintech company. He just thought about investing in a very disruptive company that was out to change the entire field of personal financial advice. It was actually pioneering online financial advice. And that was really the start of our fintech journey. So, and even to this day, we're going after markets where there is a entrenched competitor or competitors. They haven't disrupted, they haven't focused on product, they haven't built their software using an API framework. And we can go and build big companies. A lot of these companies, there's real opportunity to scale. You can sell these, but there's really an opportunity to build multi-billion-dollar companies. And with our capital base and our global footprint and our expertise across sectors, I think we're really well positioned.
We have a window in time right now because of the shift in consumer perception, because of the shift in consumers actually trusting technology brands, to be able to build some companies that start from the ground up and attack different pieces of these very, very large industries and give themselves the ability, after gaining that consumer's trust or that direct relationship with the customer, to then build out, expand, and actually ultimately build that financial institution that becomes a core part of a consumer's life.